Okay, update on TLT here as a proxy for bonds. I mentioned before in a previous video, very important to understand where this is going because this is highly correlated with the 10-year yield. And so looking at the daily chart, you can see we've had this really long decline, this really long move lower, and we did get a swing low on May 9th, right? And so this is actually day 5, or I should say Monday was day 5. This is May 16th, Monday night. So today was day 5. So this was, if I zoom in here, right, this was the 30th day of the daily cycle. Then this was day 1, day 2, day 3, day 4, day 5. Now this is important. This is so far our high on day 3. It's entirely possible that this is as high as we go and we just roll over from here. It's also true that, TLT tends to back test, right? Like look at this. It came out of this cycle low and then made this drop here and then made another high. And so even if it's going to be a bearish cycle, we probably get to like day 8, maybe even, I'd say day 5 or 6, maybe even day 8, day 9. However, it's also possible that this is an ICL, a weekly cycle low, which is important to know. So last week we still don't have a swing low, right? And so this is important, this like level of detail. To have a swing low, we need to get above 119.20 now, right? Like structurally speaking. So that's what we need to do, preferably this week, right? Get above there. The 10-week moving average is all the way up here at 122. We're down here at 116. So a long way to go. Yet at the same time, we are in the timing band for a weekly cycle low. And you think about the sort of waterfall decline. This is a massive lower low, right? Lower than all of these lows. And so at some point, we're going to need a lower high, right? Like even if we're going much lower, or I should say, especially if we're going much lower, you would expect at some point we really have to get some kind of a little bit more of a kind of sustainable bounce, because that's what's going to kind of set us up to like for that real kind of next leg down, kind of ironically, right? And so, you can imagine something like that, right? Gets people excited and then we start moving lower again, right? And so if we look at the monthly chart, really important, that's how we track the yearly cycle. And so you can see this cycle was 18 months, right? We had a high on month 13. This was 21 months. This was 20. This was a short one at 13, pretty sharp move down and then a rapid move up. This was another short one at 15. And now we're at month 14, right? And so we've already made massive new low below here and here. And so the question is, when do we get that bounce? Same correlation with the weekly, except obviously this is your monthly chart. So we'll have to think about kind of how those two kind of intersect. And again, that's going to be your key. Did we just get an ICL now? And we're now also having a YCL on month 14, right? And so we would need to get a monthly swing low to confirm that. That would be above 119.22. So that's actually the same, right? That's the same level from the weekly, actually. So that works out that those levels coincide. So that would be your first signal. Doesn't mean you're out of the woods by any means, right? You could easily make that monthly swing low and then, fail somewhere around here. You have all this air. But at some point you would imagine some kind of bounce. I mean, look at this one, right? This you could think of, like in hindsight, as a bear flag. You had this waterfall decline, this bear flag, and then it spilled over. So you're going to need to build another bear flag at some point for a bigger spill. But this is going to be really important to watch for a bigger turn in equities, because this is a very liquid proxy for the 10-year yield.